Welcome back, everybody. It's time to look for new positions and track some more transactions, so let's get right to it. Hello, welcome back, everybody. We're logged into Thinkorswim's trading platform, and we need to check on BITO and see how the options that we had sold about a month ago played out and where we're currently at with this position. So let's go over to our monitor tab and go ahead and get rid of this filter. And we need to go back further than 12 days. Let's go back 30 days and see if that's where we need to be. Okay, yep, it looks like this is where we left off with 28.50 assignment from the previous month. Yep, okay. Now I will say we had placed a covered call and a cash secured put back on June 24th, but only the cash secured put executed. And I monitored the covered call for a while. We had to set it so high. Let's see if I can see what that was set to. So the calls were set to a 29 strike at these limits, but the limit was just way too high. The stock price had dropped down so low that I couldn't really get like a 2 cent, 3 cent premium. So I just didn't do it at all. So I just ran with the cash secured put that we had executed, and I never fired a covered call again on this position, so we just let that ride out. I will say starting this week we're going to go back to weeklies and start monitoring this on a weekly basis. So let's look at the chart here for a second so we can just see what the price action has been for this entire period. So type in BITO and let's go just for a year just to get a bird's eye view of what's going on here. So you can see the 1 year low is 12.79, the 1 year high was 33.79, and then you can see all of these times that we had added to that position with cash secured puts along the way. So we have been buying it all the way on the way down, and it went up again and then went all the way back down, and again we purchased some more. So let's narrow that down just to last 90 days, and you can see again still the high is 29 and the low is 1926. Let's go over to the web application real quick so we can check on our cost basis. So here we are logged into the web application, myatmm.com. We need to come over to cost basis. BITO is the only stock we're tracking. Our cost basis is setting at $28.93. All right, so that means we could only sell covered calls at $29. So $28.93. So let's just move that off the screen. $28.93 is like right around here. So we basically have to set a cover call like at the high, this is a 90-day high. All right, let's narrow this down to the last 30 days right there. So last 30-day high is 24, lows 19. So we're still setting at close to the 30-day high right now. All right, what we need to do is first off, we've analyzed this, just looked at what it's been doing over the past year, 90 days and 1 month, 30 days. What we first need to do is track this transaction in the web application. So let's bring the web application back over, and I need to get those transactions up on the screen. Give me a sec. All right, so let's put those transactions on the screen. There we go. All right, what we need to do is track this this transaction right here, the cash secured put. So we'll add a new position. The date on that back from here is June 24th. So let's click the drop down here, go back a month, June 24th. It was a sell to open. It was a put, cash secured put. We did one contract. The expiration date was July 19th, this past Friday. The strike price we did that at was 24, and we got 245 for that. So click save. All right, so and it was 65 cents, it was 2 cents on the fees. Move that down, save it to the transaction history, and then also in addition to that, we need to go further down. So now that we got that transaction tracked, we can just go back to the last 7 days and get that more consolidated. All right, so there you can see the last price that it traded at was $23.54. So we actually just barely got assigned on this past Friday. In real life, we probably could have just taken this and rolled it and conserved that capital and rolled it for another week of premium. But so it expired in the money. So we did get assigned on this, as you can see from this transaction right here, the 2400. So it was assigned back on this Saturday. It was a stock assignment of 100 shares because we only got one contract. The assignment price is 24, which is what the strike price was for. So that's where the $2,400 came from. So we go ahead and click submit there, and it added it to our stock position up here in this group. This one is no longer relevant, so we can get rid of that. And so it's this right here, this July 20th stock purchase right here of 100 shares at $24. So go ahead and click save on there so we can get the temporary proposed transaction. As you can see, it's $2,400, no commissions, no fees, so that matches this. So click the hand to move it down. Click the save button to add it to the permanent transaction history. So now, as you can see, we've added to the position several times. We have a total of 800 shares owned, and our total cost so far is $22,650. It's only worth $18,000, so we have an unrealized loss of $3,800 thus far. We have an overall credit premium of $21.53, so we are still at an overall net loss if we were to liquidate currently. So our cost basis is setting at $28.31. Our cost basis with premiums, like if we include the premiums into all of it, our cost basis is setting at $25.62, which is just a little above what the last price was. All right, what we need to do right now is look for, hopefully we can actually sell some 8 contracts of covered calls so we can get some premium for that, and then also look to do another at the money cash secured put. But again, we're not going to go out 30 days this time. We're going to try and do it within the next week. Covered calls, we might actually have to go out 2 weeks possibly to look for premium. We won't know until we go over and look at Thinkorswim. So let's do that right now. All right, here we are setting back on Thinkorswim's trading platform, and we need to bring the cost basis up on the screen. So let's do that. There we go. We got the cost basis up on the screen now, and we need to go over to Analyze, and let's just go ahead and bring that back over so we can just check out the chart. Looks like we're not quite in a full, yeah, it looks like we're kind of in an uptrend still, but then again, you got the 30-day high right there, so it looks like it could turn around soon. But again, that doesn't really matter as far as our cost basis is concerned. We can still look to sell the covered calls at 29. So what I want to do right now is turn on this filter. We want to isolate it just to $29 strikes so we can get just those up on the screen to see what we're dealing with here. All right, and double check. Yeah, this is BITO for sure. So 5 days out, it looks like we can collect a little bit of premium just in the next 5 days. But if you look at this, so it's 6 cents for 5 days, but it's triple. It's triple to just add another week. So I'm considering I'm just going to do that. Basically, if I can secure like double or triple what I can get in the first week, then I will go ahead and move it out to another week to do that. But now you can see 19 cents. If you double that, that'd be like 38 cents. So you can't, it stops doubling and tripling. But since this is triple right here, I am going to go ahead and do the 2 week out expiration. And we are going to go for the mark. The mark is between, it's the middle point between the bid and the ask. So 21.50. So what we do is we left click on this bid to put in the initial sell order. Now we have 800 shares, so we can do 8 contracts. Oops, just 8. And the bid price, again, 19 cents we want to do for the mark. We want to go for the mark. That's the middle point. We should be able to get that. So we do 21 cents because you can't do a half a penny. All right, we're going to right click on this, confirm and send, and just check the numbers. It looks like we'll collect $162 premium in here. So all that looks good. We'll go ahead and click send. All right, now what we need to do is, and I got the orders showing up on here so you can see them when they occur, which is just nice to know. What we need to do now is look for the cash secured put. So we want to go ahead and clear our filters because we're going to look for an at the money covered call. So there we go, 75 cents. And again, look at this. See, 2 weeks out, I mean, we more than double the premium. It goes from 75 cents to out here. And I'll tell you, I know why. I'm pretty sure I know why that's happening. It's because on the first of every month, it's basically their ex-dividend date. And I am going to give you a little bit more information on that. In the paper trading account, you can't see the dividends collected. However, I am trading this in a live account as well, so I am getting the dividends over there. Again, I'll bring that information up here in a second. But last month's dividend for July, they pay out the dividends monthly. So last month for this month for July, it was $1.50 a share. For the month before, it was like $1.76 a share. So it's been quite high recently. So that's probably the reason for this tripling of premium, which is funny because we're selling the premium, but we're also, if we own the shares, we're also going to get the dividend. Now, this is a cash secured put, so obviously we won't get that, but it looks like it's baked into the premium, so we're kind of getting it anyway. Not to mention we'll get it for the 800 shares that we own. All right, so what we want to do, since it's tripling the premium here, is it tripling? No, it's not quite tripling the premium, but it's more than doubling the premium. So we definitely want to left click here for the 23.50 because last trading price is 23.54, so that it is an at the money. And the mark, again, is 188. So we want to go ahead and move that up to 188, the mark. And we're only going to do one contract, one cash secured put, because we're only doing one at a time. Right click on here, click confirm and send, and that should bring in about $187 premium. All right, so there we go. We have the covered calls and we have the cash secured puts. So we're playing both sides. And just want to confirm one thing here. The order, yeah, it is setting at $29 call. So if it was to ride up to $29, we would get out a little bit over the break even. They don't have a, that is a kind of good question. Our cost basis is 28.31. So I guess we technically could have done 28.50. Did they even have 28.50s? We didn't even look, did we? Let's come back over here real quick. I want to see what they have here. So we're going to do strike price. We'll just do 28 to 29. Look at that. They do have 28.50s. What was I thinking? All right, so look here. So it looks like we could have done, okay. Look at our cost basis. Our cost basis is 28.31. So that means we could do 28.50s and still, come out with a little small capital gain from capital appreciation, but we'll still keep all of our premiums. Not to mention, look at this, it's worth a lot more. So I think we want to do this one. And again, we don't want to do the 5 days out because look, it is again tripling, and again, it's probably tripling because of the dividend payout. So I'm going to actually go ahead and cancel this. So right click, cancel that. And we want to do this one. We want to do the 28.50s. That makes a lot more sense since that's what our cost base is setting out. Again, 8 contracts. And the mid mark price is 24. So do 24. Right click, confirm and send. There we go. 186, send. Okay, see? All right, so now we have the covered call setting just above our cost basis, which is where we want it. I just didn't think to look for the 28.50s instead. But we got that right now. It's fixed. So we got the covered calls and the cash secured put orders. So now let's go take a look at that dividend information I wanted to show you. All right, here we are. We just went out to Google, search for Yahoo Finance, go to the Yahoo Finance website. We want to type in BITO right here and hit enter. It'll open up the BITO information, and you can come over to historical data. And we want to click this drop down, change it to dividends only. That ad is so annoying. Let's go and close that, see if we can. Well, I guess we're not going to recapture that space, so whatever. Anyway, we're looking at BITO, looking at dividends only. So here you can see, so, okay, I was wrong. It's $1.77 dividend for June, and then $1.50 for July. But look, I mean, $1.68, $1.15. I mean, I don't think it's going to continue. I mean, it might, but you can see that some of the dividends, like years ago, were much smaller, but here recently they've been quite big. And since we've been since I've been personally messing with this stock ticker, I've been in it for the June 3rd and the July 1st, owning some shares, but the paper trading account does not collect the dividends. So we owned like 600 shares, I think, in June 3rd, so we would have collected over $1,000 in dividends right there, and we own 800 now, so we would have collected $1.50 or sorry, we only own 700. We just recently got assigned on the other 100. But anyway, 700 shares, we would have got $1.50. We currently own 800 shares. So come August 1st, whatever the dividend happens to be that month, assuming they do pay a dividend that month, because I don't think it's religiously every month. Yeah, see, like they skipped January there. Well, no, they didn't. They paid December twice. So I guess that was theoretically the January one right there. So it looks like they have been paying it pretty regularly every month. So it looks like it would be collecting the next one in addition. But like I said, it's not doing that in the paper trading account. But if you're doing this in real life, you would be collecting those dividends, and I am in another account that I have. So last thing we need to do is we need to check the balances to make sure we reconcile Thinkorswim to the web application. Let's do that. All right, here we are back on Thinkorswim, and we need to go over to the Monitor tab and make sure we are setting in the right account. We are not. Okay, we were. What in the world? Okay, yeah, sorry. We were setting in the right one. Okay. Yeah, go to the account statement. The balance is right there. We need to bring over the web application. So bring that over real quick. We need to go to back to the dashboard. And so there we go. So there's that 80,528.59, 80,528.59. So we are matching with the web application. So that's good. Another fun thing to do is come over to the premiums tab so we can just see how we've been doing for the month. Since I went to doing them every 30 days, it hasn't been quite as high premiums as you can see. So April, about 1,000, May, about 1,000, June, only 244. So that was a really low month. July, we just now started collecting this, so it could theoretically be the 160-ish plus the 180-ish, so it could be about 300, 350, something like that. But we're moving to the weeklies, but we're not going to get that for July because, again, we went out 2 weeks to collect like double, triple premium amounts, which makes sense to do. So we won't actually review this till we're in August, but maybe August will play out better because we're again going back down to the weeklies or bi-weeklies, depending on which ones we can collect more weekly premium amounts. Meaning, if we can collect the most doing weeklies, we'll do that. If we can collect more, like you saw just now, where we're collecting double or triple by going just another week out, we'll do that scenario, and we'll just see how that plays out. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to myatmm.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.